Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close look at a strategy called StructureBreakoutTrend. What makes this one special is that it uses no indicators at all, no moving averages, no oscillators, nothing but pure price action. Instead, it reads market structure the way a classic technical trader would, trading breakouts in the direction of the established trend. By the end of this video, you'll understand exactly how it finds its trades, manages risk, and sets its targets. Let's dive in. So what exactly does StructureBreakoutTrend do? At its heart, this is a trend-following breakout strategy that trades entirely off horizontal support and resistance. Those levels aren't drawn by hand, and they don't come from any indicator. Instead, the strategy builds them automatically from real swing pivots in the price chart. A swing high is a bar whose high is the strict maximum compared to a set number of bars on each side, and a swing low is the mirror image, a bar whose low is the strict minimum on both sides. Crucially, a pivot is only used once it is confirmed, meaning enough bars have formed to its right. That confirmation rule is what keeps these levels from repainting, so what you see in a backtest is what you would have seen in real time. On top of those levels, the strategy applies a classic market structure filter straight out of Dow-theory. It defines an uptrend as a sequence of higher swing highs and higher swing lows, and a downtrend as lower swing highs and lower swing lows. Only when the structure clearly agrees does it look for a trade. The market it suits best is a trending instrument on a higher time frame. The author suggests something like the British pound against the US dollar or gold on the 1-hour chart. This is a swing trading style, patient, structural, and designed to let winners run toward a fixed reward-to-risk target. Who is it for? This is really aimed at traders who appreciate clean price action logic and want to study how break-of structure entries work, rather than chasing every small wiggle. Remember, everything here is for educational purposes only. We're studying the mechanics of the strategy, not promising any particular outcome. Let's walk through the exact logic, step by step. The strategy works on closed bars only, acting once each time a new bar completes, so it never reacts to a half-formed candle. On every new bar, it rebuilds its list of confirmed swing highs and swing lows from recent price history. First, it needs at least 2 confirmed swing highs and 2 confirmed swing lows to judge structure. It takes the most recent swing high as the active resistance and the most recent swing low as the active support. The distance between them is called the swing range, and we'll see why that matters in a moment. Next comes the trend filter. The strategy detects an uptrend when the latest swing high is above the previous swing high, and at the same time the latest swing low is above the previous swing low, higher highs and higher lows together. It detects a downtrend when both the swing highs and the swing lows are stepping lower. Now the entry. For a long trade, the strategy requires a confirmed uptrend, and it waits for the just closed bar to close strictly above the most recent resistance for the very first time. It checks that the previous bar was still at or below that level, so it only fires on the initial break, not on every bar that lingers above it. That event is a bullish break of structure, and the strategy buys the continuation. A short trade is the exact mirror. In a confirmed downtrend, the just closed bar must close strictly below the most recent support for the first time, and the strategy sells. Risk management is structural, not arbitrary. On a long, the stop loss is placed just beyond the trend's higher low, that is, below support, with an extra buffer equal to a fraction of the swing range. On a short, the stop sits just above the trend's lower high. Because the buffer scales with the swing range, it adapts naturally to any symbol or time frame without ever dealing with point size. Finally, the take profit. The strategy measures the distance from entry to the structural stop, calls that the risk, and sets the target at a fixed multiple of it. With the default settings, that's a reward equal to 2 times the risk. The strategy holds just one position at a time and lets the stop and target manage the exit. Let's bring this to life with an illustration. On the screen, you can see a candlestick chart with 2 dashed horizontal lines, a red resistance line drawn from a swing high, and a green support line drawn from a swing low. Watch how the early candles step upward, each pullback making a higher low and each push making a higher high. That rising structure tells the strategy we're in a confirmed uptrend. Now keep your eye on the resistance line. As the candles build, One of them finally closes decisively above that red level for the first time. That is the bullish break of structure, and you can see the buy entry marker appear right there. The strategy enters long, places its stop just beneath the support line, and projects a take profit at twice that distance. Price continues to climb, candle after candle, until it reaches the take profit marker higher up. The long trade is complete. Then the character of the market changes. Price rolls over from the highs, and now each rally forms a lower high while each dip forms a lower low. That stepping down structure flips the filter into a confirmed downtrend. Watch the green support line this time. A candle eventually closes firmly below it for the first time, and the sell entry marker appears. The strategy enters short, with its stop placed just above the recent lower high, and its target projected the same distance below. Price falls toward that level and tags the second take profit marker. Notice that in both cases the strategy only acted on the first close beyond the level, and always in the direction the structure was already pointing. This is purely an educational illustration of the mechanics, not a prediction of how any real market will move. Let's go through the settings you can adjust, all of which come straight from the strategy's parameter list. The first is PivotLeftRight, an integer with a default of 3 and a range from 2 to 8. This controls how many bars must sit on each side of a candle for it to count as a swing pivot. A smaller number makes the strategy more sensitive, marking many minor swings, while a larger number only recognizes bigger, more significant turning points. The second is StopBufferFrac, defaulting to 0.10, adjustable from 0 up to 1 in steps of 0.05. This sets how far beyond the structural swing the stop loss is placed, measured as a fraction of the current swing range. A larger value gives the trade more breathing room, but it also widens your risk on each position. Third is RewardRatio, defaulting to 2, with a range from 1 to 6. This is the heart of the exit. It sets the take profit distance as a multiple of the stop distance. At the default of 2, the strategy seeks twice as much reward as the risk it takes on each trade. Raising it asks for bigger winners, but typically means fewer of them reach target. Fourth is lots, the trade size, defaulting to 0.10. Always size this to your own account and risk tolerance, and consider testing on a demo account first. Finally, magic is an identifying number, defaulting to 7,401. It simply lets the platform tell this strategy's trades apart from any others running on the same account. When tuning, change one parameter at a time so you can clearly see its real effect. That brings us to the end of our deep dive into StructureBreakoutTrend. We've seen how it builds support and resistance from confirmed swing pivots, how it reads market structure to define the trend, and how it enters on the first break of structure with a structural stop and a reward-based target. We also covered each parameter and how to run your own backtest. Everything in this video is educational content only, and nothing here is financial advice. If you found it helpful, please hit the like button, leave a comment with the strategy you'd like me to break down next, and subscribe so you don't miss what's coming. You can find more analyses over at www.algobot.live. Thank you so much for watching. Past performance does not guarantee future results. Trade responsibly.